The world's greatest investors are no longer sitting in corner offices analyzing spreadsheets and financial reports. Instead, they are commanding armies of artificial intelligence algorithms that process millions of data points in milliseconds, predict market movements with eerie accuracy, and execute thousands of trades before a human trader can blink. The stock market has fundamentally transformed, and those investors who understand how to harness AI's power are positioning themselves to capture extraordinary returns. The silent revolution in financial markets, most people don't realize just how dominant AI has become in the stock market. Artificial intelligence now drives approximately 89% of all global trading volume. This means nearly 9 out of every 10 trades happening right now are conducted by machines, not humans. The market has fundamentally changed from what it was even 5 years ago. Companies like JP Chase report they are saving roughly $2 billion annually through AI integration, about as much as they spend on the technology itself. That figure alone reveals the enormous competitive advantage that artificial intelligence provides to sophisticated financial institutions. The magnitude of this shift cannot be overstated. The average stock holding period has collapsed from roughly 8 years in the 1950s to about 5 months today, and this compression continues accelerating as AI systems make split-second decisions that humans simply cannot match. These algorithms analyze historical data, financial reports, market indicators, and real-time price movements simultaneously, identifying patterns that would take human analysts thousands of hours to discover manually. How smart investors deploy AI to gain an edge? The largest investment firms have made massive bets on artificial intelligence. BlackRock, the world's largest asset manager, allocated a technology budget of $17 billion in 2023 and expanded from 450 AI use cases to over 1,000 by 2025. The firm now operates an AI infrastructure partnership alongside Microsoft, NVIDIA, and other technology titans, mobilizing $100 billion to control the physical infrastructure powering the AI revolution. This is not defensive spending. This is an aggressive offensive strategy to dominate the next generation of investing. JP Chase took a different approach, investing $500 million in Numerai, a hedge fund that operates through crowdsourced artificial intelligence. Instead of hiring traditional analysts, Numerai runs a global tournament where thousands of data scientists submit machine learning models that compete to predict stock movements. The most accurate models are rewarded, and the best signals are blended into a single machine learning system that trades global equities. JP massive bet on this unconventional approach signals that large financial institutions believe crowdsourced AI can genuinely outperform traditional investment strategies. These firms are not investing in AI because it's trendy, they're investing because it works. When BlackRock's systematic investing team combines artificial intelligence with alternative data sources, the results speak for themselves. The team now relies on over 1,000 market signals when making investment decisions, compared to just 3 when it started in 1985. Roughly 90% of BlackRock's funds have outperformed peer medians over the past 5 years, a remarkable achievement in an increasingly efficient market. The specific technologies powering market-beating returns, smart investors are employing several distinct AI techniques to gain competitive advantages. Machine learning algorithms analyze historical price data to detect patterns that predict future movements. These models identify candlestick formations, volume shifts, volatility spikes, and other technical indicators that signal when stocks are about to break out. Natural language processing systems scan news outlets, earnings transcripts, social media feeds, and company filings to measure market sentiment. These sentiment scores are then incorporated into trading signals that tell investors whether the overall market mood is bullish or bearish. High-frequency trading powered by AI has become particularly sophisticated. These systems execute thousands of trades per second, capitalizing on tiny price discrepancies, called arbitrage, that exist for only microseconds across different markets. A human trader could never exploit these opportunities, but an AI system can monitor multiple markets simultaneously and execute perfectly timed transactions before prices equilibrate. For investors with access to this technology, the advantage is staggering. Robo-advisors represent another major category. These AI-driven platforms manage investment portfolios based on an investor's goals, time horizon, and risk tolerance. They automatically rebalance holdings, optimize asset allocation, and adapt strategies as market conditions change. Companies like Lemonade demonstrate how AI transforms entire industries. Lemonade built machine learning into its core operations from inception, using AI to price insurance more accurately and handle claims faster than traditional competitors. The company has reported accelerating sales growth as it attracts millions of new customers who appreciate its digital-first, technology-enabled approach. Real examples of investors winning with AI: the biggest institutional players are openly embracing AI stock picking. BlackRock has replaced many human stock pickers with fully automated investment programs based on self-learning artificial intelligence algorithms. BlackRock CEO Lawrence Fink acknowledged that the underperformance of traditional active equity funds often stems from limitations in human discretion. Machines simply don't suffer from the emotional biases that plague human investors. They don't panic during market crashes or get overconfident during rallies. NVIDIA emerged as the undisputed leader of the AI boom, and smart investors recognized this before it became obvious to the broader market. The company produces the graphics processing units that power nearly all artificial intelligence training and operations. NVIDIA has evolved from a gaming chip manufacturer into the backbone of the entire AI infrastructure. The company's revenue reached $215.9 billion in 2025, up 65% year over year, and it continues accelerating. Investors who position themselves in NVIDIA using AI-driven analysis captured enormous returns as the company's dominance became undeniable. Microsoft and Alphabet represent another winning combination for AI-focused investors. These companies are deploying massive capital expenditures toward AI development, more than $125 billion annually for Amazon Web Services alone. Alphabet's Gemini large language models power products across Google Search, YouTube, and Google Cloud. These investments are already translating into real revenue and sustained growth. AI systems identified these opportunities early and positioned investors accordingly, generating substantial outperformance relative to passive index approaches. BlackRock's Ben Powell articulated the current investment thesis, driving smart money, the picks and shovels play. Rather than betting solely on AI application companies, the smartest investors are backing the companies providing the infrastructure, the chip makers, energy producers, and hardware manufacturers enabling the AI build-out. NVIDIA, Broadcom, and Taiwan Semiconductor Manufacturing sit at the center of this infrastructure boom, and BlackRock specifically identified these three names as positioned for exceptional growth throughout 2026 and beyond. The reality check smart investors understand, however, sophisticated investors recognize important limitations. AI excels at processing historical data and identifying patterns, but it struggles with structural breaks. Moments when geopolitical shocks, policy shifts, or regulatory changes fundamentally reshape expectations in ways that historical data cannot predict. The market remained highly volatile in 2025 despite massive AI adoption, precisely because unprecedented events constantly surprise even the most advanced systems. Human judgment remains crucial for adapting to evolving narratives and novel situations that no training dataset could have anticipated. The competitive advantage from AI is shrinking as more investors adopt it. When roughly 89% of all trades are already AI-driven, the algorithms are increasingly competing against each other rather than against slower human traders. The obvious opportunities have been captured. This means the next generation of investor advantage will come from accessing proprietary data sources, deploying more sophisticated algorithms, or identifying emerging opportunities before they become crowded. The future of AI-powered investing, the trajectory is clear. Artificial intelligence will become even more central to investment success. The AI trading market is projected to reach $35 billion by 2030, a figure that seems conservative given the current investment intensity. Generative AI and reinforcement learning systems are advancing rapidly, allowing algorithms to adapt to changing market conditions and improve predictive accuracy over time. BlackRock is building AI agents that can directly recommend stocks, taking human stock pickers even further out of the equation. The markets themselves are becoming AI-driven ecosystems where machines respond to each other in real time, creating feedback loops and cascades of automated decision, making that unfold in microseconds. Some volatility in 2025 resulted from coordinated algorithmic behavior, and this dynamic will intensify as systems become more sophisticated and manage larger pools of capital. Smart investors are positioning themselves for this reality. They understand that passive buy and hold strategies face pressure from algorithms operating at machine speed. They recognize that traditional analysis cannot compete with artificial intelligence processing millions of data points per second. They embrace AI as a tool to enhance returns and manage risk, rather than viewing it as a threat to their approach. The stock market of 2026 and beyond will be fundamentally AI-centric. The winners will be those who harness this technology effectively. Whether through direct investment in AI infrastructure companies like NVIDIA and Broadcom, exposure to firms deploying AI successfully like Microsoft and Alphabet, or allocation to funds explicitly using AI-driven strategies like BlackRock's systematic funds, sophisticated investors are already positioning themselves to beat the market. The artificial intelligence revolution in finance is not coming, it has already arrived, and it is reshaping who wins and loses in the stock market.